been following us for quite some time, you'll be very excited to see the massive drop that took place in gold recently, because we've been tracking the story of gold for several months here. And we've been specifically pointing out the fact that the institutions have been accumulating a massive short position, okay? How's it going, fellow traders? It's Magic Trader here. And this is the CFTC report for the data that was recorded on September 20th, 2022. Welcome back for another episode. It's September 25th, 2022 right now. And we have a fresh batch of data that was just released on the 23rd on Friday, a couple days ago. And been doing some analysis on the positions of the banks. And I got some interesting information to show you. So let's start by examining gold, and we'll take a look at what's taking place with price action. Now, if you've been following us for quite some time, you'll be very excited to see the massive drop that took place in gold recently, because we've been tracking the story of gold for several months here. And we've been specifically pointing out the fact that the institutions have been accumulating a massive short position, okay? You remember how we spotted it back in early May, June, okay? We spotted the massive increase in short positions, okay? Remember, price reached near the lows and it started to curl up, and then what did we see? We saw them increasing their short positions again, all right? So you see what's happening with price? Okay, now you see why you shouldn't be paying attention to what the commercials are doing. It's always the non-commercials that you need to be focused on, okay? Non-commercials. All right, so now we have price dropping even further. All right, so take a look at the short positions, okay? Look what they did here. 117, 127, 128, 148. Massive amount. Massive. That's how much there was back here, July 26. Do you know when July 26 was? Well, I'll show it to you. July 26 was what was happening right here. Okay? This is where they filled in a massive amount of short positions. They rallied price up back to that area where they were selling. Now they dropped it back, and now we're at 148 right here. Okay? The same amount that they were here. Only difference is that they took profits on some of those short positions down here, refueled, accumulated short again, riding it to the downside. All right, so we don't see any reason why price is going to head higher from where it's at. We have targets lower. We suspect price is going to continue over the next few months. Okay, oil. Look at oil. We've been talking about how they were taking profits on long positions, and they've been doing that for quite some time. And if you take a look at just the long positions, look at that. April 19, 2022, they were at 411. Where are they now? 342,000. Not only are they at 342,000, but I want you to pay attention to the coloration of the cells. You see all these cells here? How they are more blue? That means they're cooled off. That means they're not focused on accumulating a long position. Now, we've talked about this before. The power of the spreadsheet. The power of the coloration. These spreadsheets show us the sentiment of the banks. These spreadsheets show us if they're interested in buying, or if they're interested in selling, or if they're not interested in either. That's a very key thing. And so what they've been doing all this time has been profit taking on long positions. And we've talked about this several times before, about how this profit taking on long positions have been taking place ever since price was down here and here, which got price to all the way up here, okay? Contacted massive institutional selling area. You see the big red area? And lo and behold, look what's happening now. Price is declining. So, key thing happening here on the weekly chart, right? You see what's happening here? Massive trend line, and it's breaking to the downside. This is signaling a much larger drop is coming, okay? Over time, much larger drop is coming. So, keep an eye on that one. US dollar. All right, so we had been talking about the potential for a short-term move to the downside. okay, because we had institutional supply being contacted right here, and we had massive positions that needed to be closed in the euro, okay? But the banks decided not to do that. They are shooting price to the upside, all right? So when they show us their cards, we have to take them serious. They're showing us their cards. They're showing us that they're moving the price up to the upside and creating institutional buying areas at the same time. See, this is an institutional buying area right here. This is the latest institutional buying area that they created. You know what that tells me? That tells me if you want to go long the dollar, you have to know that this is the area that price could likely drop to in the future. All right? But if you are basing a long position off of this area holding, then you're probably good to go in taking long positions on the dollar. Okay? We look at the positions here. We can see that overall longs have been the more aggressive. Okay? They've been the more aggressive. But I also will point in the direction of the fact that shorts are starting to become aggressive. Am I concerned about that? Not really. Shorts are above average. Okay, the average size is 13. So we are just a little bit above. And long positions are slightly below average. So at the same time, even though we've got these averages under, okay, like the longs, I don't see any reason why price is going to stop at this point. Now, I will point out that there is something happening here on the monthly chart. This is a big move, okay? Very big move. It's really stretched out, really stretched out. So getting in long, you have to play the long game because yes, it can continue going higher, but if it doesn't, because of it being overly stretched out, it could pause, drop, and then head higher. So you got to be aware of that. All right. So if you're long the dollar, you got to be aware that this could happen. But worst case scenario, it'll drop, hit some areas of buying, and then continue to the upside. All right. Okay. So let's take a look at Aussie US dollar. So we've been talking about how shorts have been the main driving factor here of why price is moving. They added shorts, they took profits. They added shorts, they took profits. All right. So here's where we're at now. They added shorts and they've been taking profits. 89, 87, 79. But the main driving factor here is their short positions. You see how aggressive, right? And if you take a look at long positions, you see how cooled off. Okay. They're not really focused on longs. They have never been focused on longs, which is why we had our targets down here. Do you remember that? We placed our targets down here. Monthly target, 66.78. Guess what? Guess what? We've hit our targets, okay? 66.78, targets hit. We came shy of hitting it here, and we have hit them, okay? So again, we're seeing more downside on this one. There's no reason why price isn't going to be continuing to the downside. And so just keep an eye on that one. USCAD. Remember we told you this was very low quality, not high quality. What was that? It was a selling area by the banks. So if a selling area isn't of high quality, then it typically will be removed. And so that's what has taken place. It was removed. We had a drop here. We had a drop here. A little drop here because of the weakness in the dollar from the profit taking, but now we've shot to the upside. So technically, you should not be going in short the USCAD. If you're going to be opening up positions long, then you also got to understand that the latest area of buying from the banks is right here. So any longs have to be based off of that area of demand holding, okay? Meaning price could drop. You start getting in long here, you better recognize that there's a good chance that price can drop all the way down here before it goes higher, all right? But basing your risk off of this area would be a good idea. All right, next we have the US Swiss. We talked about how it is breaking through the monthly area of supply. We had some massive candles penetrating through, but we always got price to revert right back down. But it's breaking. I don't like this chart. It's not the greatest looking chart. There's bullish pressure. We're not seeing much on the data. Okay. Euro, on the other hand, remember, we said that they'd have to take some profits on their short positions, which could have fueled a move to the upside. And look, they took profits, all right? They sure did take profits on those positions, but let me show you something, okay? You see all that? 254, 249, 241, 219, big profit taking. It fueled a slight move to the upside, but nothing lasting, okay? And now we're continuing with the overall trend to the downside. Remember, our big long-term, very long-term bias has always been to the downside on the euro, always. Why is it 173 with shorts right now? Well, contracts are expiring, so there could be a discrepancy in these numbers. We'll wait to see next week what they've done, whether they're keeping shorts at those lows or if they've added. I suspect that they've added back to them, and that's why we're getting this push to the downside, okay? We see more downside coming. All right, so pound, huge move to the downside, huge move to the downside. And both moves to the downside were taken off of institutional supply areas that we have located on our chart. You see, when you're able to find the areas where the banks are selling, isn't it amazing how price will retrace up to those areas? And that's exactly where price will end up dropping from. Quite incredible, isn't it? So that's what we're seeing. We're seeing a big bump up in short positions, 103, 109. Recently, a slight decline, but again, contracts expired. There could be a slight discrepancy. At the end of the day, look at this. Does this column not look more important to you? Look how red those cells are. You know why they're red? It's telling us that they're aggressive with their short positions. Aggressive. So that means you should be aggressive with your short positions, okay? Look at that. Blue. They're cooled off. That means they're not even focused on long positions. That means you shouldn't be focused on long positions, all right? It's a perfect example of if you just traded based on the sentiment of the non-commercials, okay, the sentiment that we present to you here using the template that we created, it's incredible just how accurate it can be. All right, US dollar, Japanese yen, same thing. You know, look at long positions. You see how aggressive they've been with their long, and look how long they've been aggressive with their long. Since May 15, okay? Since May 15. Where is May 15? Well, let's take a look. Let's move that up. May 15 would be March, April, May, June, July. So you're talking about here, okay? Aggressive, look. Straight up, right? Look at shorts, cooled off, a little bit of aggressiveness here, okay? And that kind of shifted momentum to the downside just slightly, nothing too much. And then leading up to contract expirations, they closed off those positions, okay? So they're not focused on shorts, they're focused on longs. We see price going even higher than where we're at right now. All right, last but not least, we got the Kiwi and big strong move to the upside. We've been talking about how we've been expecting this, okay? We've been expecting it. Look how they've been accumulating short positions. All right, look at their longs, very cooled off. Haven't been focused on longs. And now we're seeing a big push to the downside. Nothing to stop it. We see this heading even lower, okay? And because here's the institutional selling area that they created, this is where they're filling in their sell orders to push the market down. Any short positions used to be basing your risk off of this. What does that mean? Well, if price was to rally up, you have to understand very high odds that this area will hold and price will continue. So you should be thinking about shorts, not going long. And this supply area is the area that we are expecting to hold. Latest area of supply was created here on the weekly chart. We suspect that that will likely hold as well. So shorts, basing risk off of those areas, and you should be good to go. All right, ladies and gents, hope you liked it. You know what to do. Make sure you follow. Leave a comment down below. Let us know how you're liking these videos. I appreciate your time when you spend a couple minutes to type something up. We put a lot of effort into these videos for you, so I'd like to hear back from you. Like, comment, share, visit our website, find out what we do. You want to join us? Come on by. All right, that's it. Take care. Enjoy the rest of your weekend. We'll talk to you later. Take care.